MULN apparently has a price target of $23 as set by one analyst. So what will happen next week and should you buy? Sit tight as we go through recent news as well as my chart analysis of the past week's performance and my price prediction. But before we do that, subscribe to our channel Stox 101 for regular stock market updates. First up, an analyst who's bullish on Mullen has offered a 12-month price prediction of $23 for the stock, stating the recent debt elimination as well as the ELMS and I-Go deals as the main fuel behind this rally. Another important point to note is that short interest has pretty much doubled, and this is good news as contrary to popular belief, since the short sellers will have to close their trades eventually in the future, and this will push the price further high. Next up, the company wishes to hire a vehicle integration director along with many other new job postings that they're announcing. In our opinion, as other European countries prepare for the I-Go and as the ELMS deal progresses, Mullen should be able to sustain 30-cent levels. With all that in mind, let's analyze the charts. So as you guys can see right here now in the 1-week chart for MULN, and of course we'll first analyze the 1-week chart, then the 1-day chart, and to end it off we'll get to the 5-minute chart. We won't be analyzing the 1-hour chart today because this pretty much is just a weekly analysis, and we'll analyze the weekly performance, of course, the daily performance, and the intraday performance as well on Friday's trading session. First up, as you guys can see, we of course are in a downtrend, right? We still have not exactly recovered, but on the weekly chart we can see that we did make a pin bar on the downside over here, and it was followed by this massive red candle. So probably the effects of this pin bar have pretty much worn out, right? It was a 45% loss in just pretty much a week, I believe, right? Of course, because it was after this pretty much the stock price got inflated. So it's not exactly a loss, but it was just a inflate and deflate trend, as I already told you. And we can see that we got two pin bars over here, one over here and the other one over here. Both of these were negative, and they were followed by red candles as well. So that's a bad sign. But one thing that we can see over here is that we've kind of hit this level over here at of course 21 cents, and this level over here at 26 and 66 cents. So of course over here if we look at this level at 328, right? So that's 32 cents and 32.8 cents. That would be the resistance over here that we hit. And of course if we look at the top of this candle at 30, pretty much just 30 cents and 89, so 30.89 cents. And of course, if you look at the bottom, it's not exactly a double bottom, but pretty much a double bottom. We did get supported around 2800. And, it's just kind of, I wouldn't say that it's exactly a bullish trend, but we actually might be in for a slowdown in terms of this bearish trend, right? So as you guys can see, we were in an aggressive fall where we fell from a price of pretty much, 15 or I'm sorry for that, $1.5. I was about to say 1500 cents. And from that to a price of 23 cents. So that's an 84% fall in the matter of just, a few months, I believe. So of course, if we look over here, right, let me quickly clear off all of these drawings. What's exactly going to happen next? In my opinion, first up, of course, the earnings report that's about to come out on 14th November will decide that. But still, looking at this overall price action, we can see one thing for sure, that even over here, when we got this massive inflation and deflation trend, it was followed by this pattern, right? So I believe a similar thing to happen now, right? We just got inflated, deflated, and now I believe the market will probably stay around this range of 30 cents. And then we'll eventually go down once. Well, we can't exactly go into the negatives, I'm sorry for that, but we will, as I already told you, get back into the 20-cent range once at least, right? So once that happens, of course, it's a good buying zone. Anything under 30 cents is probably the best price you can get for MULN. Of course, you will get better opportunities in the future probably, right? But looking at the current price performance, anything under 30 cents, I personally would buy it, not financial advice. And with that being said, let's jump on into the 1-day chart to see what's exactly going on in this weekly chart. So as you guys can see right here, we're now in the 1-day chart for MULN. And first up, I'll quickly see over here on Friday's performance. I already told you guys that we'll get a candle that will have big wicks on both sides and not a big enough body, right? So of course that is exactly what happened. But what we have to look at is that, you know, there isn't much of a size difference between both of these wicks. Of course, if we look at the size of this wick over here, the top wick and the bottom wick, right, they're pretty much similar. So I wouldn't say that, exactly selling pressure was high or buying pressure was high. It was pretty much an inside candle. And what does this indicate? It indicates indecision. Indecision basically means that buyers and sellers are confused. No one is exactly making a sound decision, right? So this will probably turn out to be a massive volatility indicator for Monday's trading session, of course, because we will get the earnings report and that will turn the stock volatile. So if we look over here, the possibilities, if of course we get a good earnings report, stock will go up. If not, stock will go down. You already know all that much, right? But if, of course, we look at this trend, we are somewhat in a bullish trend. So it wouldn't be too bad to expect, a rise to this level pretty much around 34 cents. It can happen, of course, on Monday. And there's a higher probability of the stock going up at this point than it going down. It will go down. That is my personal opinion, right? And it is kind of my personal bias as well because I want the stock to go down for some time so I can buy up some more shares on a cheaper rate. Because I personally, ever since I've been analyzing MULN, I've honestly become a fan at this point because this stock, it's crazy. It has great volatility, and if you catch on to all of those right moves, you will make some money, right? Again, not financial advice, but looking over here, I would say that there's a 70% chance of the stock going up on Monday and a 30% chance of it going down on Monday, right? Now, if it goes down, what are the support levels? Of course, we have a support, as we already discussed, around 29.30. We have another support around 30.60. We have another support around 30.30 and another one around 27.80, another one at 28.70 pretty much, right? So these are some important and major support levels. We will have another support around 30.75, so that's like really close. And I believe that probably a gap up or a gap down would be enough to break this, right? So we shouldn't probably take such small levels into account. But, if we were to get a gap up on Monday, I believe that we'll have, or I'm sorry for that, not a gap up, but a bullish trend, an uptrend. We would probably have to get a small gap up back into this range around 30.75 and under that. So once we're there, we'll probably go down a bit, get supported at 30. So let me mark that out for you. We'll probably get supported at 30 cents over here, and then we might continue our trend on the upside, reaching God knows, $3,300, $3,400, right? That's my guess. So of course, because with the with the Bollinger Moro deals as well, and ELMS is bound to come out like really soon. It's bound to start their operations really soon. So once that happens, it's going to be great news for the stock. And with that being said, I don't really think there's much left to analyze in the one-day chart. But what's really left is the 5-minute chart because, of course, this indecision will be really interesting to analyze. So of course, we can see that on the 5-minute chart, first up, we did get a good uptrend on 10th November's closing, going from a price of pretty much 30 cents to a price of 33 cents almost, so that's a 10% rise. And after that, of course, we saw a gap down, which took us to somewhere around 30 cents again. We got supported at 29.40, so let me mark that. We did make a double top around that range as well, or rather a double bottom, I'm sorry for that. And then we saw the spin bar on the upside, which resulted in this bullish trend pretty much. We did see a reversal pattern, which of course got, not exactly discarded, but it's kind of confusing. If we look over here, of course, we can see that we did get a pin bar to the upside, pin bar to the downside, upside. So this should have been a reversal pattern over here, but it got discarded with this candle. And then, of course, we saw a big green candle to the upside. After that, of course, if we look over here, we did get a candle to the upside, which was a pin bar candle again, but it got discarded by this squeeze, right? It's pretty much a squeeze in terms of range. If you see shortening wicks, that's usually the result of a squeeze. And of course, this pin bar squeeze caused the stock to plummet by a lot. And of course, over here we did see some pin bar reversals, which did work out. And after that, again, over here we did see pin bars, right? A reversal. Of course, it happened. This one got discarded, right? We did try to go down. There was bearish sentiment in the market as well. Over here, this was a beautiful trade, right? Two perfect pin bars and followed by a red candle. Perfect bearish trade, good short, right? You could have easily, if I were to short even over here with a stop loss over here at 1%, you could have easily taken a 2% trade over here, going over here, right, at a price of 31.28. Now coming after that, coming to the points after that, we can see that we did get some failed reversals over here as well. And the pin bars just, kind of seem to have failed in the end. But this pin bar over here was followed by a double top. So that must have been something good at 31.40. And this pretty much indicates, as I already told you, well, let's quickly get on into the aftermarket as well before we make any conclusions. So we can see that we already got a gap up thanks to this, and currently on the aftermarket we're at a price of 31.20, I guess, right? So will this indicate a gap up? Not exactly, right? In my opinion, I still believe that we should get a gap down, and once we get that gap down, we probably will be able to go up, taking support either around 30.40 or 30.20, 30.50, or even 30 cents itself, right? So that should be a good scenario. But then again, I could be wrong. So remember that this definitely was not financial advice. You should always do your own research before you trade. But if you enjoyed my analysis, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel Stox 101 for more such videos. And as always, I will see you guys in the next one.